Okay, good evening, everyone. We can start with the class. We have this question. I gave you this question last week. I think it was sort of a homework. So let's look at the question together and see where you guys went wrong so that you can be able to correct yourself. Right, so let's start with the question. Let's start with part A. They says Transco manufacture roller coaster carts and in Cape Town, South Africa. The company's manufacturing process has been approved by SARS as a qualifying process of manufacture. The company is not a small business corporation as defined in the Income Tax Act, and the company's financial year ends on the last day of April. So it's always very important to note the last day of the company's financial year end. So it's last day of April. Then they say the company is registered as a category BA, value added tax vendor, making only taxable supplies. So these guys are registered on category A, which is 2 months. Okay. All transactions are conducted with registered VAT vendors unless specifically stated otherwise. Where necessary, Transco obtained valid tax invoices and the required documentation for all its transactions. The senior accountant provided you with the following. All amounts, it's also very important to take note of this. All amounts exclude VAT unless specifically stated otherwise. So all the amounts, they exclude VAT. So here you should know when they say all the amounts exclude VAT, so which means our tax fraction is going to be 15 over 100. Remember the tax fraction for including VAT is 15 over 115. So which means in our case, we're going to use this one because all amounts exclude VAT. Then they say for the 12-month period ending 30 April, Transco had a total turnover of 920,000. Set out below a transaction that took place during the 2 months VAT period. That is March and April. We should also take note of the VAT period. It's March and April. Right, so the first one says sales of roller coaster carts amounted to 220 for the month, for the 2 months period ending 30 April. So let's look at the question. You cannot read everything. You read as you answer. There is no time to read, then you come back and start answering the question. You should look at the question. The first question says, if Transco Limited was not a registered VAT vendor, if it was not a registered VAT vendor, what would be the requirements have been for Transco to register as a VAT vendor in relation to the 12 months period? So that is our number one. If these guys were not registered as VAT vendor, what are the requirements for someone to be registered as a VAT vendor? That's what the question requires us to do. Okay, so let's start answering that one first. So that is going to be our part A. So it's part A1. So if Transco was not registered as a VAT vendor, what are the requirements? Who have an idea of the requirements to register as a VAT vendor? For someone to be able to register as a VAT vendor. Anyone with an idea? Yes.
Yes, for companies, you must be able to make a profit of 1 million rands, and for individuals, it must be a 500,000 profit per annum.
Okay. So, which means, in short, we can come here and say, for you to be registered as a VAT vendor, you must have, it's not a profit, it must be turnover. A turnover of over 1 million. So if a company is having a turnover of over 1 million, it is forced. They must register as VAT vendors as long as they have a turnover of over 1 million. They must register as VAT vendors. If they have a turnover of 50,000 and above, they can register voluntarily. So you should look at the turnover. Like if you look at the turnover of Transcorp Limited, it's 920,000, which means they fall under here. They fall under here. So Transcorp they can register voluntarily. Why? Because their turnover, because their turnover is below 1 million, but exceed 50,000. So in this case, these guys, Transcorp should register voluntarily. So these are the most important points that you should take note when someone has to register for as a VAT vendor. The turnover for 1 million and above, you are forced. If you are found to be not registered when you are having this turnover, then it's an offense based on SARS. So which means any company which has got a turnover of 1 million must register as a VAT vendor. But if you just want a VAT number, remember there's an advantage of having a VAT number. Some businesses will not give you work if you don't have a VAT number. So that's why you see people will now go and register voluntarily. If you have a turnover of 50,000 and above, then you can now register voluntarily. So that's how you are going to answer one. Right. So let's look at, unless if there's anyone with something to add or to who need clarification, we can go to 2. Let's look at 2. 2 says calculate the VAT payable or refundable to Transcorp Limited for the 2 months tax period ended 30 April 2021. Show all calculations and indicate reasons for not claiming input tax or for not accounting for output tax. So here we are required to calculate the VAT payable or refundable. That is our 2. Right, so let's look at number 2. So in number 2, we are calculating so when you are calculating your VAT payable or refundable, you can start with the output. So we can go to our question and look at who goes to output tax. Right, the first one says the sale of roller coaster cards amounting to 220,000 for the 2 months VAT period ending 30 April. So that one is going to attract what? It's VAT output, am I right? So which means that one is going to create a VAT output. So we can say sales $220, and all remember that our amounts does not include VAT. So which means it's going to be 15 over 100 or 15%. You can make it 15 over 100 or 15%. How much are we going to have there? It's going to be 220,000 times 15%. Am I right? 33,000 here. So that's number 1. So let's go to note number 2. When you are answering your question, you don't have to read everything, especially for text. Because text, you can answer one by one note by one note. So you go to note number 2. Note number 2 says on 15 March 2021, Transpark exported roller coaster kits to the United Kingdom at an amount of 35,000 each. All the documentary proof as required by the Commissioner for exported goods were obtained. How are we going to treat number 2, exports to United Kingdom? Anyone with an idea on that one?
Exports are zero rated, so it's going to be nil.
So exports is going to be zero rated.
Yes.
Yes, this one does not have tax, it's zero rated. Always give reasons why is it not having VAT output. Here it's zero rated. Right, so that's on number 2. We can go to number 3. So text is just straight. You don't need to stress too much, because you can answer every line by line. It needs its answer. So it's not like MEC or FAC where you have to read the whole story in order to put one answer. Right, so let's look at number 3. Number 3 says on 1 March 2021, Transpark purchased a motor vehicle that the managing director used to travel to clients and for personal purposes. The motor vehicle costs 340,000 excluding VAT. The managing director is responsible for the full maintenance of the motor vehicle. You should take this part. Is responsible for the full maintenance and is going to be used to travel to clients and for personal purposes. So how are we going to treat number 3? That's it's going to be a what, number 3? It's a fringe benefit, am I right? Number 3 is going to be a fringe benefit. So it's going to create
Yes.
output VAT. A fringe benefit will create output VAT. So we have a fringe benefit for motor. Right, it's 340 including VAT, that's the cost. So you need the VAT, the value excluding VAT. So you need value excluding VAT. So the value excluding VAT is going to be how much here? We say because they say VAT is included. So we're going to say 100 over 115 times 340,000. How much are we going to have?
It's 295,652.
So we're going to have 295,652.
652.
Right? When we have this value, what are we going to do? Anyone with an idea? Then we need to calculate the consideration for use. How do we determine the consideration for use? What do we do here? 652.
You multiply by 3%.
Is it not 0.3%?
0.3%, sorry.
Yes. Then how much are we going to have when we multiply by 0.3? We're going to get
887.
887. Right. When we have 887, what's next are we going to do? Is there anyone with an idea? That responsible for maintenance, what do we do with that one?
Do we minus 85 rand?
Yes, we minus 85 rand. So we are going to say 887 minus 85 rand is equal to how much? So this one is going to give us for maintenance. Remember, if he is maintaining, so we are going to deduct 85 rand. So it's going to be it's 802. Am I right?
Yes.
Then the 802 we multiply by the tax fraction. So which is going to be 15 over 115 times. How many months did this managing director use the car? You should also take note of that. Because it's not always 2 months. You look, when did he started to use the motor vehicle? So if you check from our question, it was on 1 March. Then the VAT period is March, April. So we're going to multiply by 2. So you should always look at this. When did he started to use the motor vehicle? Because sometimes if he started to use the motor vehicle on 1 April, then here you are going to multiply by 1. So in our case, we are going to multiply by 2 because he started to use the motor vehicle on 1 March. So we're going to multiply by 2. Okay, so what is the total fringe benefit? So which means here we now have the total fringe benefit.
It's 209.
209. Right, so we are done with this one. This one you should be, because it carries more marks in your test or exam. So you should be able to follow all these stages to calculate this fringe benefit. Because you can see the calculation is long, which means there's more marks there. Then we can, if there is no one with a question, if there is a question, you can always ask. Then we were doing 3, which means we are now going to do 4. Yes, we are doing 4. 4 says the marketing director traveled to Johannesburg to work on a marketing campaign in Gauteng. The cost of 28,000 comprised the following. There's fuel cost, accommodation, Gauteng tickets. Fuel cost is 9,000. Accommodation is 15,500, and Gauteng ticket is 3,500. What are we having here? Is it VAT output or VAT input? Are we having VAT output on transaction number 4 or VAT output input?
It's a VAT input as the cost that incurred for business purpose.
Yes, these are costs, so they will attract VAT input. So we can go and start now with the VAT input. So which means we are done with our VAT output. When you are done with your VAT output, you can just come here and close. And then we need the total here for VAT output, which is 33,209. So that is going to be our VAT output. Then you come here and now say VAT input or input tax. Right, in the VAT input, we have, let's start with the one that we have. We have fuel. What are we going to do with fuel? Does it attract VAT?
No,
zero rated, ne?
it's 0 rated.
Fuel is 0 rated. Then there is also the accommodation. Accommodation is 15,500. This one is going to attract. It's going to attract VAT? Am I right? Because these guys were going to stay in a hotel. So a hotel is a commercial accommodation. Remember, there is residential and commercial accommodation. So if they are staying in the hotel, it means there is going to attract VAT. But if they are staying in a residential accommodation, there is no VAT in a residential accommodation. Residential accommodation is exempted. So when you are reading your questions, always look at the accommodation. Is it residential or commercial? Then if it is commercial, then it's going to attract VAT. So this one is commercial because he traveled and he will be staying in the hotel. So it's going to be commercial. So it's going to be 15% times, how much was it? 15,500. How much are we going to have there?
$2,325.
2,325. So that's here on accommodation. We have the Gauteng ticket. What is going to happen to the Gauteng ticket? Does it attract VAT? The Gauteng ticket. Anyone who has got an idea there? Transport services. If you check on the notes.
Transport is 0 rated.
Is it 0 rated or exempted? You must specify there. It's exempt supply. Right, let me explain the difference between zero rated. There is no much difference. You'll see at the end here, there is nothing here. But if somebody is supplying exempt supply, that person will not be able to claim input tax on all their purchases. But if you are supplying zero rated, you can claim input tax. That's the difference between, and here you cannot be able to register as a VAT vendor again on the exempt supply, but here you can register and claim input tax. So that's the difference between zero rated and exempt supply. Right, but the Gautrain ticket is an exempt supply. Passenger transport by train, bus, taxi, it's exempt supply. If you check A, there is VAT in A. There's also those, what do you call them, cargo deliveries. They also attract VAT. So you should take note of all those when you are answering your questions. Right, so which means there we are done. Let's look at the next transaction. The next transaction says number 5. So we are on number 5. They say Transpark purchased a second-hand printer to print the labels on the roller coaster costing 13,500 from a non-vendor. They purchased from a non-vendor. The open market value of the printer at the time of purchase was 12,000. Only 3,500 was paid by the end of April 2021. The balance was paid on 30 May 2021. What are we going to do with this transaction? They purchased a second-hand printer from a non-vendor, and the open market value of the printer was 12,000. Only 3,500 was paid by the end of April 2021. What are we going to do with this number 5? Anyone who has got an idea of how do we treat number 5? I saw most people who wrote that this activity, they didn't do well on this one. Anyone who has got an idea, how are we going to treat this? This is a purchase of a second-hand good. Right? Whenever you purchase second-hand goods from a non-vendor, one thing that I will say is we use the tax fraction 15/115. Why? Because this non-vendor cannot claim input tax. So which means in this amount, there is input tax in it. So the moment we buy it from a non-vendor, then it means us as registered VAT vendor, we can now be able to claim the input tax from SARS. The reason why this vendor, it means the VAT is in here in this amount because he cannot claim input tax because it's not registered. So in that case, there is always input tax in the amount. So that's number 1. Then number 2, the open market value of the printer at the time of the purchase. We are not going to use the cost. We use the open market value. But now here there's a condition now. We're not going to use 12,000. We're only going to use the one that was paid at the end of April 2021. Why? Because these people are non-vendors. They cannot supply tax invoices. So which means we only account for what we have paid. But if they were registered VAT vendor, it means we're going to use this open market because they can supply the tax invoice. So in this case, because they are not registered VAT vendor, they cannot supply the tax invoice. So we're going to take only the money that was paid. So that's how you treat number 5. Unless if there's someone who need, but another thing is always, if you buy a second-hand good from a non-vendor, always know that there is input tax, because a non-vendor cannot claim input tax. So which means the input tax is still there in that value, right? So let's look at how do we treat this one. So we're going to say second-hand printer. It was a printer. So we are going to use 3,500, which was paid, times 15 over 115. So how much are we going to have all in all?
$457.
457. But do we understand what is happening here? Is there anyone who need more clarification on what is happening here on this second-hand print? I explained 3 things. Did you guys get my explanation there? So a second-hand from a non-vendor, it means the non-vendor could not claim input tax. So which means the input tax is there. So you are going to claim input tax when you buy it. Since you are a VAT registered vendor, you can now claim the input tax. Right, so that's how you treat number 5. Let's look at number 6. What is there on number 6? Number 6 says, as from 1 April 2021, the managing director started to use his personal computer 100% for business purposes. The open market value of the computer on this date was 6,700, and he purchased the computer new for 15,000. How are we going to treat number 6? Anyone with an idea? I think it's the same like what we did on Friday. The managing director convert his personal computer to business use. So it's now under business. So which means we should now claim input tax. Because when this managing director bought the computer, his personal computer, he is not a VAT registered vendor. So he could not claim input tax. So once now it's taken over by the business, then we can now claim the input tax. I think it's more or less like number 5. So which means here, we're now going to use the open market value to claim input tax. You cannot use the cost. We're now going to use the open market value, right? So which means we're going to say, tax is very friendly. If you know your notes, if you read the notes, tax is one of the friendly module. So this one is the personal computer. So the director, when he bought this computer, he couldn't claim input tax. Now, because it's under the business, it's now going to claim input tax. So which means it's more or less the same like this one, the second-hand printer. The tax fraction is 15 over 115, because the managing director could not claim input tax because he is not a VAT registered vendor. But since now the business has taken over the printer, the computer now, the business is VAT registered, so they can now claim input tax. So that's how we treat the personal computer. How much are we going to have? It's going to be
874.
874. Right, so we will be done with the personal computer. Let's look at something else. Number 7, I think that's the last one on this part. They say a transfer paid the following other expenses for the 2 months ending 30 April 2021. Electricity, which tax fraction are we going to use here? Remember, all amounts exclude VAT unless otherwise stated. So which means on this one, we're going to use 15/100. On bank charges, the same. What about interest? Is it going to attract VAT? Interest is exempt, ne?
Yeah.
Right, remember when we were doing our, what do you call it?
It's an accounting. It's
We-
accounting.
We exempt the interest. So your interest is going to be exempt. It's a financial service exemption. So it's going to be exempted. So we are only going to have electricity, bank charges. Those are the ones that are going to attract VAT here. So let's go and just put them down here. So what is important is the notes first. If you understand your notes, you will see that nothing, checks is a matter of copying and paste. There is nothing much, because it's a rule. Text is just a rule. So you don't need to think, you just use those rules to. So the bank charges is going to be 540. So let's say 15% times 540. Then we have electricity. Electricity, how much was it? It was 1,800. So it's going to be 15% times 1,800. Then your interest is going to be exempted. Yeah, my internet exempt. My network is just trying to behave. So on the bank charges, how much are we going to have there on the bank charges? It's 15% times 540.
It's 81. 81 rand.
81 rand for bank charges. Then electricity, 15% times
It's 270.
270. Then you will be done. It's possible to get a distinction in your first test, because to me, believe me, there is nothing new that you guys are going to meet in our test 1. There is nothing. If you consolidate what we have done so far, test 1 for, remember we did test 1 for last year, test 1 for 2022, and this one, the assignment for 2021. If you consolidate all these 3 papers, you are going to see that the first test will be just a walkover. There is nothing that is going to be new unless if they change the syllabus in the exam. Right? Let's now have the totals so that we can see if we are going to have VAT payable or refundable. So our total for input, let me just put them here so that we can calculate. Is that all? Did we include everything? We're gonna lose a mark here. Why did we leave? Is there anyone who has got an idea? There's something.
Is it the purchase of the motor vehicle input denied? Is it that one?
Yes. So let me put it here. With motor vehicle. Remember, input VAT is denied. So which means it's going to have 0. You lose a mark by just leaving that statement. So in text, you don't leave in, you have to specify the reason why it does not have a figure. So which means if you leave it out, then you are going to lose a mark. So now we can calculate our totals here. For here, how much are we going to? Anyone who got it? I got something which is fun. I don't know if it is correct. I'm getting, I don't know if it is correct. Are you guys getting the same figure as mine?
Yes, sir. I got the same figure.
I was like, it's a fun figure. I was not trusting it. Okay, so you can compare now. 33,000, 33,209 is VAT output. This one is VAT input. VAT input is less than VAT output. So we are going to have VAT payable to SARS. So it's going to be our 33,209 minus 4,007. So this is going to be the VAT that is going to be paid to SARS, which is 29,202. You will be done. Your 17 marks. It's possible to take all the 17 marks. It's very possible. So you will be done with number 2. Right. If you check in one of those question papers, the one that we did on VAT, I want you guys to look at the journal entries. It's either they will bring a question for calculating VAT payable or refundable, or they will bring a question for journal entries. So we should familiarize ourselves with the two. It's either it might be journal entries or this VAT payable or refundable. Okay. Is there anyone with a question before we go to the next part of the question?
There is a question.
Sorry?
There is a question. I want to check the statement that states the category A or B. How does it affect my workings?
That one is not. What you should look at is, okay, let me just go there. I always want to be at the question. Right, when, where is the statement? These guys are in category A, category B, right? It doesn't affect. Remember when you go and register for VAT, there is 2 months, there is 4 months, no, there's 2, 3, then there's 6 months, then there's 12 months. So that's the only thing that is here, but it's not going to affect anything. So these one are registered in a category where they have to pay VAT to SARS after every 2 months. So if you are registered in this category, it means you are now going to do your VAT returns after 6 months. But they encourage people to take this one. Why? Because the money will not be too much. Because if you collect SARS money for 12 months, it will be a lot of money. So you end up defaulting. So that's why they they encourage to register on this one, so that while the money is still small, you can still submit to SARS while the amount is still small. Because here you see the money will be a lot. It can tempt the company to try to default, surrendering the money to SARS. So that's there. When you are registered, it's either you will be registered here, or here. So where it affects is only on, let me show you where it can affect in your transaction. I think we did one transaction. This one for the managing director. You see, if you are registered on a 2 months category, then like in this case, the managing director started to use the vehicle on 1 March, and their VAT period is 30 April, right? So in this case, it means we're going to multiply by 2, the tax fraction by 2, because he started to use the vehicle on 1 March. But if you could have started to use the vehicle on 1 April, it means we're going to multiply the tax fraction by 1. So that's basically where it can affect. On these other calculations, it doesn't affect. It doesn't affect at all. I think this is the only calculation that you have to take note of. When did he started to use the motor vehicle? I don't know if we are together on that one.
Sir, I think I also got disturbed on transaction number 1, where it says sales of roller coaster cards amounted to 220,000 for 2-month VAT period ending 30. So that 2-month VAT period got disturbed me, I think.
Oh, this one
Because
also. Which
yeah.
means during the 2 months.
What does that 2 months mean?
During the 2 months, these guys, they managed to sell 220,000. So which means this 220, the VAT on this 220,000 is going to fall under March and April. That's what it means here. Now, what is important is the VAT period.
Okay.
You should look at the VAT period in the question. So in our question, the VAT period is March and April, which is the 2 months. So if you check here, these guys, they sold these cards to for the 2 months. So which means the VAT that you are going to have here is going to fall under the 2 months. But let me put it, but I've never seen such a question. Let's say, let me just put it in another way. But it's very rare to meet such a question. Let me put it in another way. For an example, our VAT is 2 months, and they could have sell 220 was for 12 months. What were we going to do to calculate the one for the 2 months? Let's say the question, it was going to be 2 over 12 times this amount, am I right?
Yes.
Yes. So that's another thing, but I've never come across such a question in the VAT question. But if you come across it, it means if what you look at is if they are registered for 2 months, then the sales is for 12 months, then it means you need to apportion in that way.
Okay. No, thank you.
But it's very rare to meet such questions, but it's a good question it brings us something that we didn't pick in our question. Right, any other question before we finish this one so that we can go to part B? Is there anyone else who need another clarification? I want you guys to understand text is something that you need to refresh when you are writing. Your mind, after being blown by MEC and FAC, you go and refresh when you are writing text. You don't have also to be blown in text as well. In text, it's time to refresh, right? Let's do this one. If there's no question, they say provide the last date on which the VAT payment for April 2021 should be made to SARS. Transfer Limited submit, you guys, you submit these things. They submit VAT 201 return via the SARS e-filing system. What is the date that you must submit through the SARS e-filing system? When you are using the e-filing system, you submit on the last day of the month. Not on the last day of the month, on the last day of the following month. Which means from April, the last day of the following month is going to be what? It's going to be May, ne?
31 May.
Yeah, so they have to submit on 31 May. That's the submission. But if you are submitting through other payment methods, maybe you are doing a check, you are doing what? You do, if you are not using the e-filing system, you submit on the 25 of the following month. You can see the reason why they say those who submit through e-filing should submit on the 31. It's straight, it goes straight there and there. But if you are using other means, you may find that if it is a bank transfer, it takes time for the money to clear. So if your money takes time to clear and the due date pass, then SARS will now charge you a penalty for late payment. So that's why they encourage you to do it on the 25 so that it gives time for the clearance of your payment. So that's how you pay your SARS. So if you are not using the e-filing system, but I'm sure most people now, they use e-filing system, because even when you are using these accounting softwares, it's very easy. You can switch to the e-filing system, you can submit your VAT returns there and there to SARS. Right, so that's here, so we should take note of that. Unless if there is a question, we can go and do part B. Part B. But on VAT, remember I said, you guys, you need also to practice journal entries on VAT. I don't think after this class we'll have another text class. I will ask you to go through the question papers that we have done together. Then we'll be fine. I don't see any problem with checks in the test. We might have a problem maybe in the exam because they will consolidate everything. When we write the exam, it's going to be a lot of work because they are going to consolidate business taxation and individual taxation. Right, if there is no one with a question, let's go to part B. Part B says transport leased one of its warehouse properties situated close to an international airport to Distribution Logistic on 1 September 2020 for 15 years. GL's financial year end is 31 March 2021. The lease agreement stipulates the following: all transactions exclude VAT, and DL is a registered VAT vendor. So our transactions, they exclude VAT. Right, when you are reading here, you should now look at who is the leaser, who is the lessee here. There's a difference between checks for lessee and checks for the leaser. So who is our leaser here in the question? It's
Transport.
yeah, is the leaser here. So we are dealing with the leaser here. So they say on number 1, they say a lease premium of 500,000 is payable on the signing of the contract. Then the rent will be 70,000 per month, which will be escalated by 7% per annum on 1 September. An administration office must be erected on the property and completed by 31 March 2021 at a cost of 1,200,000. The lease agreement was signed on 1 September 2020. DL completed the erection of the office on 15 May 2021 at a cost of 1,300,000. I think we'll be able to answer the first question on part B. The first question says, calculate Transpark's gross income for the year of assessment ending 30 April 2021. Provide reasons should certain amounts not form part of the gross income and why certain amounts are included in gross income. So they want us to, so this is going to be our part B. They want us to calculate they want us to calculate the gross income. So, which means we are going to take, let us just go through those, all of them. The first one, the lease premium. How are we going to treat the lease premium? We take the full amount, am I right? The lease premium. Remember when a leaser leases, there is that lump sum that is going to be paid on signing the lease contract. So which means it's going to form the gross income of the leaser. Then it's also this 70,000 per month. So when you are dealing with the 70,000 per month, look at when was the lease signed. When was the lease signed? Is it 1 September? Yeah. So you look at 1 September 2020 to 30 April, because this 70,000 is per month. So which means we're counting of how many months to 30 April. It's September, October, November, December, January, February, March, April. How many months are there? September, October.
7 months.
7.
Yes, because
No.
September from the 1st.
September.
And until the end of April.
8. It's 8.
When was the lease signed? Oh, the file.
On the-
Oh, sorry, look, it's not April. It's 31 March. Remember, they are different, this one, sorry. So it's going to be 7.
It's 7 months.
Yeah, it's
Yeah.
7 months. What are we going to do with this one? I saw most people, they struggle with this 7%. What are we going to do with the 7%? They will be escalated by 7% per annum. Anyone who has got an idea of the 7%, are we going to adjust this with the 7% or not? We don't have an idea. Yeah.
We are
It
not
must be a-
sure.
No,
It must
just
be
say it. Say it. It will help. Because I saw there was a challenge on this part. But let me just finish so that let me say it so that we quickly
It
finish.
must be added. or the 7. We must calculate 7% of 70,000 per month.
Starting from when? We start from when? From now.
No, we start from the 1st of September. Yani is real.
Right, let me show you something here. He's almost there, but where he's getting lost is when do we start? When you escalate per annum, which means in that current year there is nothing. You are going to escalate after the end of the financial year. Then that's when there will be a year. Because remember, they escalate per annum. So you cannot adjust this 70,000 by 7% because we still not even started the year. So which means from 1 September 2022, that's when we can now adjust the rentals by 7%. It's just like now you sign a contract to rent a flat. Then they say the flat is 8,000 per month, but will escalate by 7% per annum. It means the 8,000 per month for that year, you are going to pay it. Then after 1 year, that's when you will now, every year it will be escalating by 7%. So that's basically what is here. So which means in the current year, we are not going to escalate. We are only going to take the 70,000 and 500,000. Then in the following year, that's when we start to escalate. What about here?
Sir, they didn't specify which year. It's not fair. I mean, they just said 1 September.
No, they use this word, escalate, by 7.
So if they say escalated, it means we need to think of the following year, not the current year.
You can't escalate in the current year. When you escalate, it means after 1 year, then you start to increase by 7%. Then the following year. So when something is escalating, you see what happens every year. It means they are going to say after every year times 7%. Then this amount for the year times another 7%. Until that's how they do the escalation. Yeah, but it was a bit tricky, but that's how you treat the word escalation is the one that is a challenge there. Then what are we going to do with the administration office? When a lessee erect a building as per contract, the cost of erecting that building is going to be income in the hands of the leaser. What was signed is going to be income in the hands of the leaser. But the only problem that we have here is you can see this date. That's where the trick is outside the financial year. So which means we're not going to include this administration office because it's outside the financial year. That's the only trick. But if it was inside the financial year, it means we're going to take 1,200,000 as gross income of the leaser. Because when there is an agreement to lease to erect a building by the lessee, then the cost of erecting that building is going to be income in the hands of the leaser. And so that's how you treat this. So which means when we go to our answer, we'll just put them like this. I saw there was a bit of a problem, but that's how we learn. So which means we have lease premium. The lease premium, we just check it as it is 500,000. Then we have the rentals. The rent is going to be 70,000. We say times 7. which is going to be 490. Well, 7 times 7 is 49. So it's going to be 490. Then the administration office, so we say it falls outside, so which means it's going to go to 2022 financial year. That one is going to fall under 2022 financial year. So it's not going to be part of the cost. But if it was falling under the 2021, you're going to include it. So all in all, how much are we going to have? We're going to have 9 here, 9. So it's going to be 900,000. So this is how you were supposed to answer this part B. I don't know if there's another question before we go to the other part, which is 2. 2 says calculate Ms. Munyeza's income for the current tax year. Provide reasons for all inclusion from Ms. Munyeza's income for the current year. Let's look at what they say about this. They say one of Transport's director, Mr. Sipho Muyeza, passed away on 30 June 2020 due to an accident at one of the company's construction sites. Mr. Muyeza also held 15% of Transport's equity share capital for 25 years. Assume the following payments were made to the spouse during the year of assessment, 28 February. Proceeds of 1 million from an employer-owned policy on Mr. Muyeza's life. Mr. Muyeza is the sole beneficiary. The premiums were paid by Transport and not taxed as a fringe benefit. Then a contribution towards Mr. Muyeza's funeral cost, and 20 million in respect of Mr. Muyeza's 15,000 shareholding. How are we going to treat it? I think we only have 3 transactions here. How are we going to treat these three transactions? This one and this one. Anyone with an idea? Are you guys there? Any idea on this one? There's 20 million in respect of 15% shareholding. So the question wants us to calculate the income. The question wants us to calculate, we can even do it here. They want us to calculate the income. Which ones are going to form part of the income? There is 1 million employer-owned policy. $1,500,000 is going to be income. Then they also receive this contribution. Remember, even if it is going to be exempted, but it must first be income. So the 30,000 is going to be included, even though it is going to be exempted. But what about this 15% shareholding in equity shares? %15 shareholding is going to be what? It's going to be capital. Equity shares are capital, so you can't include them in the income. So this one is not going to be part of because it's income, it's capital. Remember, the gross income the gross income formula is the one that we use here. We're talking of income. So which means we're looking at the gross income formula. So this 15% shareholding is equity. These are equity shares. So they cannot form part of the gross income because they are equity. They are capital. So which means we're not going to take them as part of the income. What we will take as part of the income is the dividends that will come from this 20 million. If there was a dividend payout, that's what the one that was going to be income. Right, so that's how you answer this. Let's look at the last one. I also want you guys to familiarize yourself with this one. You see how many marks do they give? You see in your test, it will be there with a lot of marks. This one, it will be there with a lot of marks. You see 20 marks. Right, so let's go through it together. They say, one of the directors of Transpark, Mr. Nyatinlov, regularly buys and sells listed shares. So this guy is in the business of, he regularly buys and sells listed shares, but also invests in commercial property, primarily to generate rental income from such property. Do you see what happens here? He has commercial property which he generates rental income. Then they say Mr. Ndov permanently resides in Stellenbosch, South Africa, and he purchased a commercial property in Cape Town, South Africa, for 10 million during August 2009. Do you see that the commercial property that he purchased, this one, is not also part of this investment property, according to what I see here. Let's see. Missing of permanently he purchased it's a commercial property. So which means it's part of this one. So that's a commercial property. It's part of the commercial property, which means he bought it to generate rental income from the property. Right, so that's the first paragraph. Then a foreign investor from Japan approached a Cape Town-based commercial property broker during August 2020 to make an offer of 25 million to Mr. Law to sell the property. You see, there's someone who is trying to just convincing him to sell the property. Do you see, he bought it for 10 million, and now this one is offering 25 million. Then they say excluded from the offer of 25 million is an amount of 250 brokerage fees, excluding VAT. Mr. Law signed the offer to purchase from the foreign investor on 2 December 2020, and the property was successfully transferred into the name of the foreign investor on 25 February 2021, on which date Mr. Love received cash payment of 25 million from the foreign investor. The property had a tax value of 4,800,000. So there's, if this is like this, which means there's capital gain tax value and selling price, there's much difference there. So there's going to be capital gain tax, but we're not going to do anything to do with capital gain. So the question says, discuss with reference to case laws whether the disposal of the commercial property in Cape Town, South Africa by Mr. Ndlovu will be included in his gross income for the 2021 year of assessment. Right, where do we start? Anyone who has got an idea? Because this question is always there and it carries a lot of marks.
We start from the beginning, sir.
We start from the beginning.
Yes, sir. We put the actual figures.
Okay. Right. I want you guys to look at how do you answer this question when you are approached with this question. Right. Let me just go to a new page here. That's where we end, right? So when you are answering this question, remember they are saying determine whether the sale of the property will be part of gross income. So let's use this page. I always want you to go to the gross income formula. The gross income formula. What does the gross income formula says? It says in the case of resident, amount received that's our gross income formula. What else do we need? Do we have? We have year of assessment. Am I right? Then we also have total amount in cash or otherwise. What else do we have?
Receipts of a capital nature.
Yes. So I would prefer you to make it in a table form, right? So if you make it in a table form, it's going to be easy. So these are your gross income formula. So you can make it in a table format like this. So what do you do when you are answering a question? You just go and look. In the case of a resident, amount received or accrued. So here we just need to look at if the amount was received. So which means in number one, we look at if the amount was received. So which means when you are answering the first part, you can look at did Mr. Love receive the 25 million? That's what we should look at there. You can see here a foreign investor, then on Mr. Love signed the offer to purchase, then and the property was successfully transferred into the name of the foreign investor, on which date Mr. Love received cash. Do you see that one? So which means it qualifies for that one. It qualifies for that one. The 25 million was received. So by Mr. Love. So in this one, when you are answering this one, let me just try to summarize. Remember, we say received or accrued. So which means whichever comes first is the one that you are going to follow. Whether there is an agreement, but the money is not yet received, then it means it's going to take the accrual. If the money was received, then it's going to take the receipt. So here you can just come and say received whichever come first. Whichever come first will determine the date of here we use the case of so that's the case that we use there. So which means whichever, so in this case you received, but when you are determining whatever was received, whether it was received or accrued, as long as it is received or accrued in the financial year of assessment, then it's going to be part of the gross income. Then when you go to the year of assessment, you now look at the year of assessment. Yes.
Sorry, Ravmo.
Yes.
Is it necessary to quote those court cases?
Yeah, you will get more marks.
Yo,
You'll get more marks. If you put court cases there, they will increase their mark. You see, that's why here you see they say discuss with relevant case law. So just quote which case law is going to make this ruling strong. So you can just quote a court case, but if you don't know it, you don't know it, but you lose something out of it, right? Then we were in the year of assessment. What do you do in the year of assessment? What do we look at? Remember, the year of assessment for this guy, but I don't know why they put it this one. This guy is not it's not a company. So the year of assessment of individuals is 28 February. All individual year of assessment is 28 February. So that's what you should look at. Does it fall in the year of assessment? You can see here the transaction was successful into the name of the foreign investor on 25 February 2021. So which means it falls under the year of assessment. So you can now come here and say, so during the year of assessment, you can now come here and say, the contract of sale it was concluded during the year of assessment. So that one is straight. You can look at the date, which is 25 February. You can even indicate the date, 25 February. That's when the contract was concluded and the payment was made. So it falls inside the year of the financial year. Then we go to total amount in cash or otherwise. So here you look at, there must be actual amount or accrued. So in our case, Mr. Love received 25 million cash. So which means there is cash there. It's not accrued, it's actual. They received the actual amount. Then let's look at this one. You should say more. That's why I left this. I wanted to note of capital nature. Right, on this one, you should look at two things. What are the two things that we should look at? The intention of the taxpayer. What was the intention of the taxpayer when he buy these properties? Let's go to the question and look at the intention of the taxpayer. So if you check, the intention of the taxpayer was to invest in commercial property, primarily to generate rental income from such property. Am I right? So that was the intention of Mr. Law. So Mr. Law's intention was to invest in property so that he can generate rental income. So his intention was to sorry. So that was the intention of Mr. Law. His intention was to invest in commercial property to generate a rental income. Right. So you can see that did he change the intention? So you can now come here and say change of intention. Did he change his intention? Because the selling of this property, I don't see where he changed the intention. Is there where he changed the intention? Because here he was just approached. He was just approached by a foreign investor. It was to sell at his best advantage. You can see here, he saw that he bought it for 10 million. Now he can get 25 million. But he did not change the intention. The intention is still there. The intention is still to invest in commercial property. But here he was just attracted by the 25 million. So he decided to sell the property. So there is no change of intention. If there is a change of intention, it means on this line, they must tell us that Mr. Law now decide to because here he invest in property. If there was a change in intention, then it means he might decide to buy and sell properties. Then in that case, it means the 25 million is going to be gross income because he's now in the business of buying and selling properties. But based on this information, there is no change in intention. He was only attracted by this figure, the 10 million and the 25 million. So there is no change in intention. So you can just come here now and say, under the change of intention, what can we say? You can say selling the property. Selling the property to a foreign investor is not an indication of change in intention. It is not an indication of change in intention to investment in speculation. But he only did it to realize the capital asset. So he only realized the capital asset at his best advantage. At his best advantage, he saw a profit of 15 million. You can sell and then you say, I'll buy another one. But there was a lot of profit there. So what are we going to say now on this process? Are we going to call it revenue or capital? Huh? Are you guys there? It will be what?
Yes.
It will be still be capital. And will not be included in the gross income and will not be included So that's how you answer your, especially the part that has got a lot of marks is this one. Capital nature. You should look at the intention of the taxpayer when he acquired the asset. What was his intention? Was there any change in intention? Then you look at that one as well. Then you can, in some cases, you will see sometimes I will not put the conclusion inside here. But I've already put the conclusion here. The proceeds will still be capital and will not be included in the gross income of. So you can come and put your final conclusion here. So in our conclusion, what are we going to say? but it's still the same like this one, which means we just move this one to here. But what I will show you is for it to be gross income, it must meet all these. So you see it failed here. That's when it is failing to be gross income. So your conclusion is now going to be the sale of the Cape Town property does not constitute gross income because it is capital in nature. So which means that is going to be your conclusion. The sale So that's how you answer these questions. So if it comes, which I know is going to be there, it might be a different story. I would prefer you guys to use a table format to answer it, which means you just come here and write your, then you just fill in based on the scenario. It's going to be easy that way, right? Unless if there's anyone with a question. Is there anyone with a question? Any questions so far?
Sir,
Yes.
you saying that answering that question, it must meet all those requirements for it to be
Gross income.
falling under gross income. Yeah.
Yes. It must meet all. So if it does
All
not,
of them.
if it does not meet, it's just like now, if it does not fall under the year of assessment, then it's
Yes.
not going to be gross income in that year of assessment. So it must meet every one here for it to be gross income. So once
Okay.
it failed to meet any one of these, then it's not going to fall under the gross income of that particular company or person.
Okay. No, I understand. Thank you.
So that's how you make your conclusion here. So which means in your conclusion now, you come here and look, did it manage to meet all these? Then if it managed to meet all these now, then you can now come and say it's going to be gross income because it meet if like in our case, if it could have met the capital part here, then it was going to be gross income, but it didn't meet that part. So that's how we answer this question in the exam. And for test one, I know this question will be there. There is no way it cannot be there. There is no way. This one and VAT, those are the main question for test one. VAT and this gross income or general deduction formula. Remember, if it is a general deduction formula, it's still the same here. In the production of income, all those things. Remember, you need to, when it is gross income, instead of saying not of capital, you're now going to say in the production of income. Was it used in the production of income? If not, then it's not part of gross, it's not part of a deduction. Right, another question before we close. Anyone with another question? Right, so which means for text, what I will ask you guys is